Welcome back for those who are in the room. I'm going to say one thing, which is that because of shortage of time, unfortunately, we have really not any time really for questions from the audience today. But the speakers who have been here already, for example, Pat will be around, and I'm sure there's lots of questions that you want to ask her, so she is available. The same applies to the next speaker, Thomas, who I'm now going to introduce. So Thomas is going to talk about what has changed for Africa. He's going to drill into the numbers. Just to give you some background, Thomas was with Deloitte Hotel Benchmark, where he was responsible for creating and leading the department's business development function. He held this role until the international expansion of STR, in which he then joined in March 2008, I believe. And he has since focused on overseeing STR's rapid growth outside North America. So let's crunch some numbers, shall we, Thomas? Let's drill in, as I said. And please, Thomas, take the stage.
All right, well, good afternoon, everyone. It's a pleasure to be back here in Morocco. Thank you very much for the invitation. And as was just mentioned, I'm going to talk to you about the data and the numbers. And this will be our agenda for the next 15 minutes or so. We're going to have a look at Africa in a global context before we drill down and look at the real data here across the continent. We're going to have a look at supply and then also look into the pipeline. And I will say for the start, I know that obviously there are lots of challenges around the world. We heard that from Pat in the previous session. But I am going to be, for the most part, unapologetically optimistic. The data is really quite promising across much of Africa, and we're going to see that now. So let's start by looking at Africa globally. And here we've got all the main regions across the world. You've got occupancy and percentage change to 2019 for the month of September. So we're talking about the latest available data. And really what we've got is a three-tier recovery now. You've got Asia Pacific, which is still challenged, of course, because of zero COVID, as we've heard. You've then got the Americas, pretty much back to where they were, doing really rather well. And then you've got EMEA, Europe and Africa, very similar in terms of performance, single digits behind in terms of percentage when compared to 2019. So well on the way back here in Africa. If we look at then at average rate, and there is a slight delay on this, apologies. So if we look there at average rate, what we can see both monthly and year to date is a very different picture. We all know across the world just how quickly and strongly rates have come back. And we can see that very clearly is the case in Africa, particularly here in the north of the continent, really part of the group of countries that are really leading that recovery quite well. So if we put those two bits together, occupancy and average rate, then we move to RevPAR, of course. And with the exception of Asia Pacific, we can actually see that across the board, RevPAR is back, both monthly and year to date for September. Here in Africa, RevPAR is above 2019 levels. So it's a positive story being driven by average rate that RevPAR is now back above 2019. But let's now drill down and look at the market data in more detail. And I've just taken 10 key countries here and looked at occupancy on a rolling 28-day basis indexed to 2019. And what we see here is quite similar to what we see across a lot of Europe. Most of those countries are very nearly there, 90% or more recovered, but not quite nudging over the 2019 level. There are a few exceptions, as you can see then. Nigeria, well ahead of the pack, and we're going to hear more about that shortly. Ethiopia's been doing rather well as well. And then at the other end of the spectrum, you've got Botswana, which is still some way away from the prior peak. But moving to look at the same chart, but this time for average rates, and you can see, as you would expect, it's a completely different scenario, with all 10 countries now above 2019 levels. That's being led by Ghana, by Egypt, by Ethiopia, but you can see across the board, rates are now back and above the prior peak. But let's drill down now and look at some of the key cities. And this is occupancy year to date for September, and candidly, it doesn't look great. There's lots of red bubbles on the chart, but what we have to do, we have to think back, we have to remember Omicron, we have to think back to the beginning of the year. There were restrictions in place, people weren't traveling. As we move now towards the present day and look at September as a standalone month, a lot of those bubbles, they turn from red to yellow. Things are getting better across the board. And whilst, yes, there are still a few markets there that are sub 50%, most are growing every month as we go by. It's being led by Dakar, by Cairo, a little further behind there, Lagos, the Seychelles and Mauritius as well. So things are getting better. And if we index that month on 2019, you can see quite clearly that although most cities are clustered around the 90% mark or above, they're not quite there. But we've got a group of 6 there which are now back up above 19 levels, led by the Rwandan capital, Kigali. So again, some positivity to be seen from an occupancy perspective. Average rates. We've always seen across this continent that rates vary greatly, as they would do. Obviously, a vast, vast continent. US dollars, September year to date. You can see there's a collection of markets in the southern part of the continent, sub $70. So that is quite low when you compare internationally. But on the flip side, there are a lot of markets that actually compare very well when you compare internationally. High-end leisure destinations, Marrakesh, Seychelles, Mauritius. But also there are some key cities there, Dakar, Kigali at $163. That's higher than Los Angeles. Or Accra at $151. That's higher than London or than Sydney. So we really do see, when compared internationally, some strength in many African markets from a rate perspective. And if we look there and see it indexed, again, this is year to date on 2019, the majority are above the levels we saw previously. And if you look at those top 4 there, Mauritius, Marrakesh, Accra and Sharm, 3 of the 4 leisure-driven destinations. There's been very little pricing resistance from the leisure traveller thus far, as they're, of course, so keen to get back out there after 2 years of lockdown. They want to get back out. They want to enjoy an experience. But now let's look at 5 key stories from around the continent. And I'm going to start here in Morocco. And the tagline there, Moroccan leisure leading the way. You'll see what that means more shortly. But if we look at Morocco's occupancy on a national basis, we see actually a very typical pattern that we see across many, many countries. We're nearly there when you compare to 2019, but not quite. So a very typical pattern happening here in Morocco. If we look at the same chart, but for average rate, again, very typical, significantly above the levels we'd seen previously. It's about a 300 dirham premium nationwide on average rates when compared to 2019. It's about $27. So not insignificant in terms of rate growth across the kingdom. But if we break things down and have a look at some of the key markets, Agadir, Marrakesh, Tangier, you can see there occupancy at or slightly above the levels that we were seeing before the pandemic. But if you look at Casablanca, and the same mirrors in Rabat, there's still a gap. So we've very much seen the leisure demand fully recover, corporate still to do so. But from a market that has performed quite typically to a market that has not, and that is Lagos. But it hasn't performed typically in a very positive fashion. If we look now at occupancy, 2022 to 2019 by month, and you can see for the whole of this year, with one month, 2 month exceptions, occupancy across Lagos has been above where it was in 2019. That very much bucks the international trend. And the reason for this is domestic demand. This is some data from our friends at Tourism Economics, and what we can see here is of all of the African cities, Lagos next year is forecast to have the second highest overnight domestic visits. So that's not necessarily in a hotel, but overnight domestic visits. This is very much, as I say, being driven by domestic demand. It's expensive for Nigerians to travel at the moment. There are visa restrictions, challenges in that area as well. So they're staying at home and they're spending their money in hotels across the country. And what we see as a result is rates have grown significantly as well. You can see there throughout this timescale, now we're about 35% above where we were in 2019 across Lagos rate-wise. So it's been a very strong performing market. And from one side of the continent that's performed well to another side on the east, Addis Ababa. It's a market we've talked a lot about over recent years. Obviously, this conference has been in Addis in the past, and it goes from strength to strength. What we see here is occupancy indexed on 2019, but what I've done here is broken it down by day of the week. So we've got the weekdays, Monday through Wednesday, and as you can see there, it's pretty much back, pretty much recovered. You've got the shoulder nights, Thursday and Sunday, about 15 to 20% above where it was, but then look at the weekends, Friday and Saturday night, 30% or more above. Really a lot of leisure demand going into Addis at the moment. But of course, Addis benefits from many demand drivers. Corporate, absolutely. It's the head of the African Union, the diplomatic capital of the continent, driving demand consistently. Ethiopian Airlines, we've heard about connectivity already today, how important it is and what a fantastic job that airline has done in opening more and more markets up to the world. And then lastly, we've got events going on. The Great Ethiopian Run there, attracting thousands of visitors from across the world to Addis. So lots of positivity for the Ethiopian capital. And if we translate that then to average rates, you can see regardless of the day of the week, it's about 30% ahead of where it was. Now, it must be said that this is nominal data. And if we look at the inflation rates in Ethiopia, about 17%, in Nigeria, it's about 13%, what we see with this growth, it's still outstripping inflation. This isn't just inflationary growth, this is real ADR growth as well, which is, of course, a positive for the industry. Now I'm going to go to the south of the continent. Unfortunately, my positivity is going to be subdued a little bit now because things are not going so well in South Africa. We heard earlier from Pat about the economic challenges in the market, and it's being translated very much into the performance as well. You can see pretty much all of the sub-markets here are still below 2019 levels, and three of the big ones there, Cape Town, Johannesburg, Sandton, all at least 20% behind. So we know what's happening with the economy, but of course, airlift, when you're a long-haul destination, is incredibly important. And your national carrier stops flying and then comes back with a very limited route network. That's going to have an impact. And of course, being a vast nation as well, reliant on internal flights, when one of your biggest low-cost carriers also stops flying, that's going to have an impact. So challenges abound in South Africa. And if we look at average rates, we can see exactly the same thing happening. We're not seeing the increases that we are across many parts of the continent, and actually still some markets are below 2019 levels, which is very much bucking the trend. But you can see that in Nelspruit, in Port Elizabeth, and most noticeably there in Sandton. But unfortunately, we don't think that's the end of the challenge by any stretch of the imagination for South Africa. Again, using some data from our friends at Tourism Economics, prior to COVID, 10 million international arrivals a year into South Africa. Next year, we're forecasting just 7 million. So still an awful long way to go for South Africa. But for the last of my 5 stories, let me just touch upon the Seychelles. I'd love to be there, that's for sure. And as I mentioned, there's been little pricing resistance from the leisure traveller. And people are flocking back, and they're flocking back in numbers. You can see pretty much throughout the whole of this year, we've been there or thereabouts from an occupancy perspective, pretty much recovered, and rates have grown even further. So the Seychelles doing really very well. And you may have noticed on one of my previous maps just how strong the average rates are. And that's certainly the case in the Seychelles, 543 US dollars. Quite eye-watering, really, to see. But in Africa, there's something for everyone. Mauritius, also a beautiful, attractive destination, less than half the price. And then, if they're out of your price range, you can go to the north and stay in a hotel for less than $80 a night. So across Africa, from a leisure resort perspective, plenty for everyone. Now I'm going to change tact, and I want to look at brands. Now, some of these slides I have presented at AHIF before, but I'm not going to apologize for that because I think they're really incredibly impactful, and they look at supply. And the first thing, we all know how vast Africa is, but just from a geographic perspective, US, China, India, Japan, most of Europe can fit geographically in the continent. But there are only 5,000 or so hotels, 200 times fewer than the countries that fit inside it. Quite a startling statistic, really. Where is that supply? Well, there are only 4 nations with more than 50,000 keys: Egypt, Tunisia, South Africa, and of course, here in Morocco as well. And to put that into some kind of context, New York has 130,000 keys, Dubai 142,000 keys, London 153,000 keys. In comparison, Africa is still very undersupplied. But things are changing. Things are changing. This is a slide I first presented on the AHIF stage 10 years ago in Nairobi, because a decade ago there were 18 countries with no internationally branded properties at all. Today, there are just 7. And if you look at domestic brands, there are just 5 with no branded suppliers. Azalai is present in both Guinea-Bissau and Mauritania. So we have seen a rapid expansion in branded supply across Africa over recent years. And that is not stopping now. To finish, we're going to look into the future and look at the pipeline. And if we look at the top countries in terms of the number of keys in the pipeline, it's all about Egypt. More than 20,000 keys. That's followed by Ethiopia on about 6,500, and here in Morocco with 5,000. Although it must be said, a lot of the projects that are happening here in Morocco, some incredible luxury, attractive resorts and hotels upcoming. Really good to see. But it's not just the sheer number that we need to look at, it's that green bubble as well. The percentage that existing supply will increase if all of those projects come to fruition. So you can see actually for all Egypt's 20,000 keys, it's not a huge increase in their supply because it's such a developed market. But look at Ethiopia, Cape Verde, obviously an up and coming resort market as well. Cameroon, Cote d'Ivoire, DRC, there are big increases afoot across the continent. But if we look then and shift that to city, Cairo leads the way. And Cairo has more keys in the pipeline than any other African country. That's how far ahead Cairo is in terms of new developments. And then you see the typical suspects, Addis, look at the percentage increase though, really significant. Nairobi, Lagos, Boa Vista following. But Cairo really is the development hotspot, and I've taken this map from our parent company CoStar's platform. Each of those diamonds, each of those pins represents a project in the active pipeline. You can see right across the city, but a lot clustered around New Cairo City in the administrative district. So with that, I'm going to just summarize with 5 key takeaways. So occupancy is nearly back for most. Average rates, again for most, have roared ahead. Leisure across the continent still delivering much of the recovery. The importance of airlift always present. And then finally, there is a strong pipeline in many pockets. And of course, as we all know, for this continent, opportunities abound. And with that, I will say thank you for your attention and enjoy the rest of the day. Thank you.